After months of delay, South Korea has decided to raise electricity and gas rates on high global energy costs and mounting losses of state utility companies. The rate hikes were largely expected and delayed, but concerns are rising it may fuel inflation and increase financial burden on individuals and companies still struggling to ride out economic uncertainties. Let's now bring in Professor Yang Jun-seok at the Catholic University of Korea to look further into the possible economic impact of utility fee hikes. Good morning, Professor Yang.
Good morning.
Thank you for joining us.
Oh, you're welcome.
The government has already raised electricity rates by 8 won per kilowatt and gas rates by 1.04 won per megajoule. This means that, for example, a 4-member household will see their monthly electricity and gas fees go up around 7,000 won on average. Now, economists project that this will raise this year's consumer price inflation by 0.1%. How do you gauge the impact on inflation, Dr. Yang?
Okay, well, looking at the data, when looking at inflation over the last 12 months, the component of the consumer price index with the highest increase has been the utilities, electricity, gas, and water, while the headline overall CPI over the last 12 months has risen only by 3.7% in April. The cost of utilities over the last 12 months rose by 23.7%. Now, what's disappointing is that this really high increase in utilities have been taking place when the cost of fuel, oil, and natural gas has been falling. The West Texas Intermediate oil has fallen from a high of $122 per barrel in June last year to about $72 currently. Natural gas last June was about $930 per million BTUs, and it's now about $250 currently. So that's actually pretty much back to pre-pandemic levels now. Even though the fuel prices have been falling, the electricity prices and gas prices in Korea has been heading the opposite way. That has been very disappointing. How much the rising utility prices impact on the consumer price index? Well, utilities form about 17.1% of the spending basket that you base the CPI on. So the rise of 23.7% for utility prices ended up raising the CPI inflation by 0.8% in April. Right now, the rise in electricity and gas prices on average is thought to be about 5.3% overall. So the additional effect on inflation, that will be as your commentary has stated, it's probably going to be fairly small, about 0.1% or maybe even less. And you should also note that the Korean electricity prices have not gone up as much as in some other advanced countries, like, for example, the United Kingdom, UK, electricity and gas prices rose by 80%. Other European countries, Eurozone countries, rose by 40%. Japanese electricity prices are on line to increase up to 42% this year. So compared to those countries, Korea is getting off somewhat lightly. But what I think we should really emphasize is that this rise in electricity and gas prices are actually delayed inflation. Prices should have gone up last year with the rise in fuel prices. But using government controls, the government did not raise it last year. That's why we have to raise it this year, even though fuel prices are falling. But there has been a lot of follow-up problems from the fact that the government had frozen the prices of electricity and gas when it should have gone up. For one thing, the low prices probably raised the amount that a typical consumer uses for gas and oil. So it worsened the imports of gas and oil by using too much electricity. Because we use too much electricity, the imports of gas and oil probably was higher than it should have been, and that contributed to the trade deficit, and that weakened the won, which raised the prices of imports. So it may have hit the pocketbooks of consumers indirectly anyway. And then there has been a large amount of losses piled up for KEPCO and Korea Gas Company, KOGAS. And this increase in price for electricity and gas this time, it will help reduce the losses. It will not quite eliminate the loss completely, but because of the debt that was piled up last year, they not only now have a higher debt load, they also have higher interest burden because, well, interest rates are very high right now, and they borrowed a lot of money last year, and they're going to have to pay for that as well. So it might have been just better off if we had let electricity prices go up last year.
So it seems that this might not just be an isolated rate hike, but additional rate increases are likely to follow in the months ahead to make up for the losses incurred, as you mentioned, Dr. Yang. There is another important meeting coming up. The Bank of Korea will hold a monetary policy meeting this week to set its key interest rate. Would the electricity and gas rate hikes affect the central bank's rate-setting decision?
Probably not. The scheduled rate hike, as I said, will probably only impact on the CPI inflation by about 0.1 percentage points if we look at it over the last 12 months. And it's a delayed inflation. It's not really what's happening right now, but it's what we have to do to recover from what we did last year. So it will probably not affect Bank of Korea's decision, but I think we should recognize that there will be indirect effect from rise in electricity prices, which will affect current inflation, which is that because you have higher electricity and gas prices, the cost of things that are using this electricity and gas will rise as well. So it will contribute some to the consumer price index, but I don't think it will be large enough to really change Bank of Korea's mind.
The utility fee hikes will cost an average four-member household less than 10,000 won per month. And compared to other advanced countries, electricity prices overall still remain relatively cheap for South Korea. But for large companies that consume massive amounts of electricity, it might be an entirely different story. Some estimate that local firms in the manufacturing sector, the backbone of Korea's economy, will have to take on additional burden worth tens of billions of wons. And this is where other economic uncertainties still remain. So what is your take on this, Dr. Yang?
Okay, well, part of the reason why we have some of those manufacturing industries in Korea in the first place is because of low electricity costs. And if electricity is provided to them below cost, then what you're really doing is giving these private companies public money or taxpayer money so they can make their private profits. To flip it around, it's saying that part of their private profits will come from just give-outs from the taxpayers, and we don't really want that. Now, some of the biggest industries in Korea are semiconductors and steel making. Those two industries in particular, it really uses a lot of electricity. And the reason that those industries are so big is partially because of the low electricity prices in Korea. But as I said, so if you provide below-cost electricity to these companies, well, that below-cost electricity, the difference in cost and price has to come from somewhere. That's coming from losses that are incurred by Korea Gas and KEPCO, and eventually either they'll have to, Korea Gas and KEPCO will have to eventually raise consumer prices, or it will have to take a bailout from the government, and that's going to be counted as a subsidy to these large private companies. In fact, the United States is already complaining that there is already de facto subsidies to steel companies in Korea. So unless you're particularly happy with the idea that we're just giving money away to private companies that they can count as private profits, you should really charge the full cost of any raw material, including electricity and gas, that the country provides to these companies. Now, similar logic applies to small businesses as well. They are complaining a lot that increased electricity prices will eat into their margins, and they're doing very badly to begin with because of the pandemic. But still, if you provide electricity at below cost to these small businesses, you are basically feeding private profits with public money. Now, for small companies, there may be a justification for doing that because, well, you want the owners of these small companies to survive, and you may consider this as sort of a welfare policy rather than electricity price policy. But still, it's usually not a good idea to provide below-cost services to a large group of people or private businesses, especially if you have lower-cost, below-cost electricity and gas for everybody. That means you're providing subsidies not only to perhaps those people that really need it, but even for people who can well afford to pay higher electricity prices.
So it's inevitable. The rate hikes may slap a huge financial burden on local companies, but most experts agree that this round of rate hikes are far from enough to resolve the astronomical amount of deficit Korea's state utility firms have already endured. So does this mean we'll see more rate hikes down the road this year as implied earlier? And also, I think more importantly, how do you assess the economic dangers stemming from utility firms' snowballing deficits?
Okay, KEPCO losses in 2021 was 5.8 trillion won. 2022 losses were 32.7 trillion won. And estimated losses for first quarter this year is already around 5 trillion won. The current price increase will reduce the losses. It will not stop it, so that losses will probably continue this year. Last year, KEPCO said that it would need to raise the price of electricity by slightly more than 50 won per kilowatt hours. So far, since then, the price has risen by about 30 won per kilowatt hour. Because the oil and gas prices have fallen from last year, they probably don't need as much as 50 won per kilowatt hour, but still, the current rise is not expected to be enough. And then there's paying for all that losses that came in last year, as well as the interest payment on that, which I've already mentioned. So there will probably need to be more price hikes this year. And one reason for that is that KEPCO and Korea Gas is beginning to affect not only the people that we've already talked about, small businesses, some industries, consumers, but also the financial market. Because if you do not get enough money to operate, you need to borrow money to operate. TEPCO, KOGAS, as well as the Korean government, because they racked up a very high deficit last year, they all went to the bond market to try to raise money. And because of that, they crowded out a lot of companies from the bond financing market last year. Those companies could not find enough money to borrow in the bond market. And this included a lot of very good companies, especially in the construction sector. They usually didn't have trouble getting financing in the past, but because last year KEPCO, KOGAS, and the government soaked up so much money that a lot of fairly good companies could not get loans, and even very good companies which were able to get loans, they had to pay much higher interest. And a lot of people are expecting that to be occurring this year as well. Now, the government has said that KEPCO on net will borrow about 10 trillion won this year, but the market does not seem to believe it. The market expectation is that KEPCO will issue another 30 trillion won's worth of bonds. Some analysts believe that they have already issued more than 10 trillion won in bonds this year so far. Now, KEPCO operating losses in first quarter 2023 was already more than 6 trillion won. So if this trend continues, then construction companies will have difficulties finding finding financing this year. Financial markets may be in turmoil because there's not enough money to go around for other companies. The government, TEPCO, and coal gas just may soak up so much of the money in the financial markets that there might not be room for any other companies. And then one more worry, TEPCO, while a government state-owned corporation, it takes investment from private investors, and they may not be happy with the government for keeping electricity prices low, incurring so much loss that's from government price controls that they may sue the government, especially foreign investors in TEPCO. So that's another concern that the government has to keep in back of their heads.
Thank you very much, Dr. Yang, for today's insights. We appreciate it, and we'll speak to you again next week.
Thank you.
If you're listening to our program using the podcast service, just a reminder that we do go live Monday through Friday, 7 a.m. Korea Standard Time. So tune in and help us make the show more informative by giving us your input. See you bright and early on Good Morning Seoul.